Today we're breaking down RIZE, the native utility and governance token of the Rizenet ecosystem, using the same framework professional traders and long-term investors use when evaluating a new digital asset. This is not a meme coin, this is infrastructure. The current price of RIZE is less than 1 cent at 0.009 per token. The total and maximum supply is fixed at exactly 5 billion RIZE tokens, with no mechanism to mint additional supply beyond this cap. At launch, RIZE carried an initial circulating market cap of roughly $27 million, with a fully diluted valuation near $100 million. These figures matter because they define dilution risk, upside potential, and long-term supply dynamics that directly influence price behavior. When discussing scarcity, it's important to be precise. RIZE does not rely on inflationary issuance or future minting. Scarcity is defined by a hard cap supply of 5 billion tokens, combined with how those tokens are distributed and locked over time. A substantial portion of the supply is allocated to governance, treasury, and long-term ecosystem development, with multi-year vesting schedules and cliffs. This reduces the liquid float available on the open market, particularly in the early years of the network. As adoption increases and more tokens are bonded for governance participation and platform access, the effective circulating supply can tighten further, creating scarcity through utility and commitment rather than artificial burns. RIZE is an ERC20 token, initially released on Base, while its native execution environment is Rizenet, a public permissioned blockchain built using Avalanche L1 technology and fully compatible with the Ethereum virtual machine. This design allows fast finality, low fees, and high throughput while maintaining institutional grade compliance and auditability. Rizenet is purpose-built for real-world asset tokenization and decentralized machine learning, not retail speculation. A key institutional differentiator is Rizenet's integration with the Canton Network. Canton is the world's largest institutional blockchain network, supporting trillions of dollars in monthly transaction volume across major global financial institutions. TRIZE operates as a validator and infrastructure participant within this network, enabling Rizenet to interoperate directly with regulated financial systems. The core problem RIZE is designed to solve is inefficiency in traditional financial markets. Real estate, private credit, construction financing, and carbon markets suffer from illiquidity, slow settlement, restricted access, and fragmented data. TRIZE addresses this by tokenizing real-world assets and bringing them on-chain in a compliant, transparent, and programmable way. Over $2 billion in real-world assets are already in the TRIZE pipeline. RIZE has direct utility across the ecosystem. It is used to pay transaction and tokenization fees, unlock premium platform features, access decentralized AI models, and secure priority allocations to vetted tokenized assets. Rizenet is also developing a native decentralized lending and borrowing protocol where tokenized real-world assets can be used as collateral, allowing holders to generate yield and unlock liquidity without selling their positions. Importantly, RIZE does not use an aggressive burn mechanism. Instead, value accrues through fee capture. Fees generated from tokenization activity, platform usage, and decentralized AI services are routed back into the governance treasury. This supports reinvestment, ecosystem expansion, and long-term network resilience rather than short-term supply manipulation. Staking in the RIZE ecosystem is governance focused. Token holders bond RIZE to participate in voting on treasury allocation and strategic decisions. Voting power increases over time through a maturity-adjusted model, reaching up to 3 times the vote weight after 36 months. This structure rewards long-term alignment and discourages short-term speculation. Security and compliance are core to the design. Smart contracts are audited, validators are permissioned, and compliance frameworks such as KYC and AML are embedded directly into the platform architecture. Rizenet integrates institutional custody solutions, Oracle infrastructure, and regulated distribution partners, positioning RIZE as an institutional ready digital asset. The key takeaway is this: RIZE is not designed to chase hype cycles. Its value is tied to real adoption, real assets, real fee generation, and real institutions moving on chain. If you found value in this, like and follow at Tally Trades 1. In part 2, we'll analyze partnerships in depth, investigate unlock schedules, and governance concentration. Thank you for your time and engagement. I hope this session provided clarity and a stronger framework for evaluating digital asset investments. See you in part 2.